A lot of people had really hard times this week in the market, and I'm here to tell you, I mean, it looked bad, right? Like, you see a lot of your share prices going down. You might look at your average cost point. You're like, oh my gosh, this is less than what I bought it for. If I sold everything right now, it's worth zero. But remember, I want you to think about this like people think about real estate, okay? You buy a house. If the house value goes down, if you're not selling your house, it doesn't matter, because you still know what you have. You have a house. Now, before you bought into whatever you bought into and invested into it, you did some research. You did some due diligence, right? And at the time that you looked at it, it was a good investment based on what your goals were and what it was doing. For me, it's cash flow, right? I'm looking at stuff that's gonna pay me no matter what. So these funds and stocks go down, I'm getting paid. They go up, I'm getting paid. I don't care what happens in life, I'm getting paid from having them. Now, in down times, they may pay a little bit less, but I'm not worried about that, because my goal is to get so much coming in that if I get paid less, it doesn't even matter. You know what I'm saying? Like right now, there's some people I see on YouTube and in some Discords I follow and stuff like that, and they're making $50,000 a month. And I'm like, okay, so even if a month comes up where he doesn't make 50K, it goes down to 40 or goes down to 30. That's a pretty big percentage off the top, right? Like 50 to 40,000 is a 20% reduction in pay, right? If you went to work and you got a 20% reduction in your paycheck, that'd be a big hit to your family, to paying your bills and paying your expenses and stuff like that. But if you have enough invested where you're getting 40,000 instead of 50,000 in 1 month, I mean, it matters. It matters. I'm not saying $10,000 a month is not a big deal. It is. It's huge. But in the grand scheme of things, if you have enough invested where that percentage changes your volume by that amount, you still have $40,000 that came in. You know what I'm saying? So like, let's say in a smaller scale scenario, right? Let's say in our scenarios here, where we're working in and having $1,000 a month coming in, and we lose 20%, right? Then we have $800 a month coming in. That's still $800 a month. And you know what the good thing about it is? When these funds go down in value, guess what you get to do if you want it? You could buy more at a lower price point. So then let's say you're putting in $500 a month. You know, let's say $500 a month would buy you 5 shares. Let's say they're $100 a share. Well, now if it goes down, you know, let's say that same $500 gives you 10 shares. Now, if you get paid per share, which is how these funds work, then you're just increasing the number of shares you have and increasing your payout, even though the share price is going down. Now, some people look at that and say, oh my gosh, well, you know, this is not gonna help me, because if I need to sell out everything I have invested and I need that cash back, then I won't have it. I mean, and if you're investing money that you need to have back, you might need to reevaluate your investments, because the point of the investment is you put it there to work for you and do its thing. And while that's happening, there will be ebbs and flows in the market. It'll go up, it'll go down, it'll correct. The market will correct itself. But in the meantime, you just hold strong. You just keep doing what you're doing. Now, there are some caveats to this. Like, if the fund or a stock that you're invested in, if the company comes out with a new plan and they're doing something completely different than what you saw them doing before, and you think what they're doing is no longer going to be profitable, they're no longer going to be able to sustain the dividend that they were giving you, they're no longer going to be able to continue doing what they were doing, then yes, that may be something you may need to consider selling out of and getting out of. But if the fund is still operating and doing what they said they're going to do, and it's just a downturn because the whole market is down, not because that one fund is just doing bad, then you need to stick to your guns, in my opinion. I mean, that's at least what I'm doing. I'm going to stick to my guns, because I've already researched what they do and how they operate. And right now, when I look at the market going down, it is a total market that has gone down. It is not just 1 or 2 sectors. It is not 1 or 2 industries. It is not 1 or 2 of the funds that I'm in. Everything on my chart was blood red. So I'm like, you know what? On these red days, that's when I try to scoop up some more. Literally on Monday, I'm doing research over the weekend. On Monday, I'm picking some new picks. I got a little bit of money sitting in there, and I'm like, listen, it's gotta find a home. I need it working for me. That's the whole purpose of this. Have the money you have work for you and get you where you want to be. So I hope you all continue reaching your goals. Keep doing what you're doing. Don't be scared of the downturns. You know, of course, look, reassess, see where things are. But if everything's operating the way you want it to operate, and the downturn is because of some crazy calamity in the news, political stuff, you know, Trump almost got shot. Oh my gosh, the markets went crazy. Biden steps down, Kamala Harris is coming in. Oh my gosh, the markets went crazy. Like, no matter what happens, the markets are gonna go crazy because people are gonna react. people are going to buy stuff, they're going to sell stuff. It's going to happen. Institutions, large companies and organizations, they're planning what in the US, the new regime of power balance is going to look like and how it might affect their industries and their businesses. And some CEOs or heads different places are deciding that, hey, we want to pull out of our investments, or we want to reassess, or we want to maybe not put as much money into certain infrastructure. It's going to happen. That's just part of life. That's how the world works. But in the meantime, tell me what the purpose is of every business is: to make money. So those people are there, their full-time job, their only thing they're supposed to do is figure out how to be profitable. So if you have all those heads working together trying to do that, you'll see the same trend in the market that's been happening over the last 100 years. More than that, the market keeps growing. So you see a downturn today? Yeah, there's a saying. They say today's highs are tomorrow's lows. All right? So what you see today, in 5 to 10 years, it will not be even relevant. And if you look at, I put up some charts. I might cut this video and put a chart in. But anyways, there's some charts I looked at of the growth of the S&P 500 over the last 100 years, 50 years, 70 years, 30 years, 20 years. And when you look at the growth of it, I mean, the very bottom of the dip during COVID, in one of the largest dips of the market within our current lifetime, it didn't even touch the top of the market after the previous big recession or crash, which was the 2008 housing market crash. So you're going to tell me there are people in 2008 who are at the peak of that, the highest value that the market had ever been in their whole lifetime, and then a few years later we get to 2020, we have another crash. The bottom of the crash in 2020 was still higher than the highest high that people had back in 2008. Again, it just goes to prove today's highs are tomorrow's lows. So don't get affected by what you see. And if you do see today's low, in my opinion, that's opportunity. You can just get in on that, because later it's only going to be higher. It's only going to be higher. That's just my opinion. But yeah, take it for what you want. See ya. Peace.